Good morning. Ira Epstein with your Morning Flash Update. And this update is for Thursday, the 3rd of August, 2023. In it is a day chock full of economic data. But let's not forget what's going on here. All right. We are in a washout phase, a big one in the stock market. It's nowhere near through, as you can see. I don't know where the bottom's going to come in. But what the market is doing is it's taking back what it gave in the month of July. Remember the 13 days in a row up in the Dow? Seems so long ago. Coming down here. As the dollar maintains its strength, it's weighing on the metal markets. Copper got a bounce after getting as low as 382, which takes it down about 20 cents from the high it made just, 5 days ago? That's unbelievable. In the foreign currency market, the British pound down 57 as the Bank of England did go up in interest rates a quarter point. The vote was 6-3, which shows there's dissension showing in, and growth looks to be slowing. I'll show you that data in a minute. Grain market sort of flat right here. We continue to take up to new highs on this move. The 2, the 5, the 10. Now, they're not all making new highs, but certainly the 10 is interesting, and so is the 30. They're both over 4% again, and they just keep acting like they want to churn on. Gasoline prices, this is a bounce. You got to 271. You talk about a market that got painful. Yesterday was the day. Yesterday said, we're done with the summer rally. That was the statement. Follow through for the naysayers that didn't believe it, and they've probably been punched out of the market now with those losses. You didn't drop that way in the main energy. Oil stayed up. You know OPEC is meeting right now, and as the meeting goes on, they'll probably come in and say, no, they're going to hold production. But gasoline, heating oil, that'll act differently. Those are the products. A lot matters as to what's going on with demand at this time of year. So as we take a look, the Challenger Gray job cuts, 50% cut. People are holding on to their people now. That's in the corporate world. Down almost 50% from what it was just last month in June. The second quarter preliminary non-farm productivity data. All right. Revised non-farm productivity for the second quarter, up 3.7%. They expected 2.3. We're getting more out of the workers. The non-farm labor costs were up 1.6%, less than the expected amount of 2.5%, but larger if you look at it than the fourth quarter final. Why they compare it to the fourth quarter is beyond me. And the first quarter labor cost is the one I cared about. You were up 1.6%. That's first quarter versus the expected 2.5. So I don't understand how they report it, but about where it was before. Jobless claims came in this time up 6,000 at 227, and you added this time to continuing claims. So that should take a little bit of pressure off the Fed, but we're getting this with these numbers. It's not a big churn to the upside or the downside. We're going to get a lot more data. We get the U.S. June final July service index is coming out very shortly. We get the ISM's going to release their service sector indices at 9 o'clock. Factory order data today will be coming out at 9 o'clock. We get the EIA natural gas report. That's going to come out at 9:30. And Eurozone economic data came in a bit strange, a little weaker. PMI 50.9. When you look at producer prices, they were down 0.4 on the month versus that's double what they expected, by the way, which is good. That's what the bank wants to see. Producer prices on the year were down 3.4. They expected it at 3.2. And looking at energy prices, ex-energy rather, PPI, ex-energy, down 3.2% on the month and up 2.5% on the year. The problem is, for Europe, energy prices are on a sustained move to the upside. That is going to prove, in my opinion, to be fairly problematic for them come this fall and winter. As you can see, OPEC just isn't putting out the product anymore, and that's something that they're going to have to look at. Now, today's a day that if I were you, I'd be looking at this, pivot points. If you're an in-and-out trader, after big breaks like this, pivot points, a good market to run it on might be the gasoline as an example. Big break yesterday, went through all the pivot points. Generally, you don't do that day by day, and all of a sudden you'll end up with these lines that come in, and you go to the upside and the downside. You find out where the support and resistance zones are. You tie it together with momentum, and all of a sudden you may have a pretty interesting plan that you like to work with. This is a free series. It teaches you how I teach. That's the beauty of it. How do you get it? It's simple. You go on our website to iraepstein.com under free offers. That's right, free offers. You can also click up here, move your cursor right at the top where my hand went off the screen, but it'll be right up there, and that'll take you there, and choose from all the different things you want. We'll take you right to that area. I'm Ira Epstein. You have yourselves a great day. I will catch you all at the end of the day with the market wrap-up.